be the case for the markets as well. What a stunning rebound. Will it last or not is the question on everyone's mind this morning.
Good morning, Aisha. Well, I think I got it correct. I told you at 22,800, we added 1,000 point lower. Yesterday, we hit 21,800. Now, if you have sold and you have raised cash, if you watched ET now and we've been selecting, then this is the time to deploy. Look, three things are irreversible. One, the election result, according to most data, I'm not a psephologist, but it seems that the ruling party will be back, maybe not in the same majority as we are talking. A. B, there is FI selling going to continue because money is going into China and China is rebounding. Now, valuations there are more comfortable, plus the uncertainty in India till the election will give them a cause for repatriating some money. But third, if you see inflation data, if you see US bonds, if you see US dollar and the global environment with metals, I think the macro and the micro are looking extremely good. So fingers crossed, I think we will get to much better, much higher levels. The FIs, if anything, will return only after 23,000 is crossed decisively and the election results are out. So till then, do your shipping, bottom fishing, look for the stocks which you like. But I think in the short run, we may have made a bottom for this part. And then we will take it from there as the progress of the earnings and the results play out. But according to me, we are in a very, very safe territory at this 21,750, 21,800, where we see a lot of support and a good time to accumulate good stocks.
Right. So, Sanjiv, you've liked Vedanta. You've talked about, getting into an SIP into HDFC Bank as well. And Vodafone, of course, has been your all-time favorite. But any new names that you recommend buying into right now?
So again, look, Aisha, the world has changed for certain groups, and that is particularly the AB group. AB Capital, AB FRL, Ultratech, Hindalco, Vodafone. In fact, the ugliest duckling has actually led the revival in the whole group. And look at how Vodafone has rebounded. Today, there is talk of 32% CAGR growth by a very big analyst firm, and which tells me that there are 2 rate hikes on the ARPUs which are going to lift sharply. Now, we know that they have, commitment to the government as far as, but the lending as far as bonds is very minimum. So even if they raise bonds, it will increase the cost a bit. But I think Vodafone is from an ugly duckling is going to be a swan in the next 1 year. So I am very bullish on the AB Capital Group, and I think AB Group is going to lead this market. Top picks remain Ultratech, Grasim, Hindalco, ABFRL. You cannot have 170 lakh crore on Trent and ABFRL, which is actually catering to the mass of India. You know, your Peter Englands and Van Hussein, and that just trading at 25,000 crore market cap. So the much needed fillip in capital will see internal cash flows. But I am bullish on all the 5 plays on the AB group.
Okay, bet on the...
As a disclosure, most of these stocks are in our portfolio. We think these are going to lead the charge from for 2024, despite the volatility. And Vodafone, according to me, is a doubler from here.
Okay, betting big on the AB group. That's the call coming in from Sanjiv Bhasin. But opinion there. Do you think the easy money has been made now and returns could be a lot more muted? Or do you think one can still jump in around the 200 levels?
Correct. I think you summarized it. When they bought Blinkit, it was supposed to be an ugly duckling, and it's turned out to be, the best play ever that they did. So if at 45 rupees it was downgraded, at 210 it is being upgraded. I think wait for the Swiggy IPO. According to my ground sources and the restaurant which my son runs, Swiggy is gaining more market share. It's faster, and I think that you should take some chips off the block. Now, obviously, this remains an institutional favorite. First, they offloaded it at 50 rupees, only to come back and start buying at 180. Risk reward is not favorable. Book profits here would be my suggestion.
That's quite a call. Book profits on Zomato is what Sanjiv is saying. Kunal, what about the charts though? Does it seem like it's going to stall here?
So, so far over the last 2-3 months, we've seen 185, 86 to be a good support zone for Zomato. In fact, yesterday also intraday when the stock had, when the results were out for the stock, we've seen some extreme round of volatility, but I think closer to 186, 187, the stock formed a low yet again, and then from there on the stock bounced even on an intraday basis. So that itself is a very strong demand or a support zone for Zomato. So I think till the time the stock doesn't break below this level of 185 approximately on the downside, we could be assuming that the stock may go into a slow, steady and gradual uptrend. 200 still seems to be a resistance for the stock over the near term. So we'll have to wait out for a breakout about 200 for a fresh buy on Zomato.
Okay, the other stunners yesterday were from within the cap goods space. What with the move coming in on ABB, which started off with a gap up and stayed put there, closed in I think with almost a 10% gain or so, at least on the futures, and Siemens as well lapped up all those gains. Sanjiv, your take here, because no math of valuation seems to be holding true on some of these MNC cap good names.
Correct. And you've seen that the slew of new launches which are into manufacturing and so on. So I think that is what is driving that. There is, as expected, the new theme is manufacturing, only that it has already these stocks are 5 times from their price about 2 years back. So leaders are the leaders, and these companies are cash rich, debt free companies which have a very good order flow. But Aisha, for new entrants, or it is better to do a mutual fund SIP rather than go fresh entry. I think, like I said, I think IT, metals, and FMCG have a better risk reward than capex stocks here. So my only pick over there definitely would be Larsen and Toubro and Bharat Forge. The rest we would be equal weight or wait for corrections. But like I said, there is a slew of money in the new funds offerings which is chasing these stocks.
Interesting. Sanjiv, though, what about Tata Motors? Have got to address that. Almost a 9% fall there, given the muted guidance that they talked about for JLR. Do you see some pressure on the stock for the next few quarters, or for that matter, even the earnings too?
Yes, and that is what I said yesterday. Convert Tata Motor into Ashok Leyland. What now Tata Motor is pricing is 2 years growth, and now they've indicated that there is definitely a slowdown headed. You cannot grow at the pace they have. The stock has been a 4-bagger. I think, according to me, Ashok Leyland should be the star auto performer in this year. So we are putting our money there, and we are very, very bullish on Ashok Leyland. Maruti is our second pick, and Hero Honda on the third side. But yes, Tata Motor will be in a range. It has maybe peaked out for time to come for the near term. And then you will see the global macros. China is coming back, but they've indicated that the JLR sales may not be as, what the street is making out as the growth rate. And that is expected at such a big base.
All right. And what about DLF? It was a pretty steady set of numbers in terms of the profit and the other metrics on financials. Does this continue to remain one of the favorites if you had to cherry pick within real estate?
Yes, Godrej and DLF both. But like we said, we are more bullish on India Bull Real Estate for the reasons we've given. They've raised funds, almost 4,000 crore, which is coming on the table. Long-term investors are putting their money. You have a 2008 inventory, which will give excellent returns over a period of time. They are in the process of getting the final approval of the merger from NCLT on the 22nd. And some of parts at 6,500 market cap, you can't go wrong. So do pick your winners and losers. But we think the other real estate plays are again a play on the new offerings which are there. So the risk reward doesn't seem all that favorable, but like we said, the deleveraging of DLF's balance sheet has been very, very swift in the last 2 years, where return of capital has improved. And that is what has been the silver lining. As I stay in DLF, I know that their news, Primava and West and so on has been sold out like hotcakes. So you see, Aman, the triple whammy of high gold, high stocks and real estate is all seeing demand for real fixed assets. And that may continue for some time, albeit that once the elections are over, you may see a little bit of, consolidation. But I still think DLF is a good play over here. Only we are more bullish on India Bull Real Estate, where we think the risk reward of doubling is much more in the next 1 year.
All right. Thanks very much for highlighting your recommendations and overall view on the market. Sanjiv, good to have you as always.
If you like this video, then like, share and subscribe to ET Now.